Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Dominic Weller, one of the managers of the Octopus AIM Inheritance Tax service. Hello, Dominic.
Hello, Alex.
First off, could you just tell me a little bit about Octopus, who they are?
Of course, yeah. So Octopus is a privately owned business set up in 2000 by 3 founders. It is a specialist asset manager. We manage about 7.2 billion in all kinds of different assets, and smaller companies play a big part in that.
Okay, and the AIM Inheritance Tax service, what's that all about? What does that aim to deliver for investors?
Yeah, so we launched the Octopus AIM Inheritance Tax service back in 2005, and were also in 2013 the first to launch it as an ISA. It allows investors to invest into AIM companies, and these will be managed in a discretionary way by us. And if they hold these stocks for 2 years, and at the point of death, they should fall outside of their estate for inheritance tax purposes. They should also receive capital growth over the long term. So our median portfolio since inception has compounded at about 10% per year after fees.
And so why should I trust Octopus to do this for me?
Yeah, that's a good question. So as I alluded to earlier, Octopus is very much a specialist asset manager. So we have got we are leading in business property solutions, we are leading in venture capital trusts, and we're leading in enterprise investment schemes as well. So we're one of the largest providers in that market and have a lot of experience in managing these portfolios. If you take a deep dive into the team that is managing this service, it is the Octopus Smaller Companies team. We manage about 1.5 billion in investments into the AIM market. We have been doing that for a very long time. In fact, some members of the team have been investing in AIM since it was set up in 1995. There's 9 of us. We've been working together for a very long time, so we know each other. We can really challenge each other on those stocks, and that is very helpful. Advisors always tell us that they like that we have the setup that we have venture capital trusts, which look at the very smallest end of AIM, and then also a microcap fund, which looks kind of at the middle of AIM, and then the inheritance tax service, which looks at the more established businesses on AIM. So we often, when we plug businesses into our inheritance tax service, we have been knowing these businesses for a long time, sometimes even at a pre-IPO stage, because we have such a dedicated team and a broad range across the market.
One of the biggest pushbacks we'll get from clients or journalists when we talk to them about investing or AIM, your ISA in AIM is, wow, that's really risky, isn't it? AIM is just full of all these terrifying small companies which go up and down and then crash. And how would you respond to that?
It's an interesting question. We get it quite often, and it's interesting that there is still this perception about AIM. I think the first important point to understand is what AIM was set up to do, and it was very much set up as a platform for ambitious entrepreneurs and young companies to raise capital in a quick, efficient way. And I think that's something amazing. I'm from Germany originally, and we don't have such a structure where these businesses can be plugged in. That's the first point, and I think that's something quite valuable. Now, AIM has grown up massively over time. When in 2000, the average market cap on AIM was 28 million, we're now at 104 million average market cap. So these businesses are getting larger and bigger and more established. We see businesses from the main list moving up to AIM because they see the benefits. And on the flip side, we see a lot of businesses which decide to stay on AIM rather than moving down to the main list. Now, it is really, from the deal flow we see, we also look at the main list, but from a fundraising perspective, it is really the market of choice where companies come to raise capital. And we believe that you get exposure to very exciting British growth companies and global leaders from all over the world on the market.
Could you just give me a few examples of the companies you're invested in?
Yes, so as I said already, in the AIM Inheritance Tax service, we look very much for established businesses because of the risk nature and the mandate we invest in. So we have a refined process of how we find these companies and how we invest in them. We look for companies which are established, which are profitable, which are cash generative and have a sufficient track record on public markets. We try to get to know the management teams, we go on site visits, and we really want to understand whether these management teams have a vision and a strategy to create shareholder value over the long term. We want businesses that can double their profits in the next 3 to 5 years, because that is what we believe will drive the share price in the long term. So we are very much see ourselves as co-owner of these businesses. If you look more from a qualitative perspective, we like businesses that have a competitive edge to them, some sustainable nature in what they do. Now, this can come from a lot of different things. This can be IP, this can be know-how, this can be brand, this can be established relationships, and many other things, or dominating a niche market. But that's what we look for very much in those businesses.
So in terms of names people have heard of, particular companies you're investing in, I think you're in Young's Brewery.
That's right. Young's Brewery is a family-owned business and is operating a pub estate across London mainly. It is very prudently run, growing its profits every year. It's one of the few companies that has one of the most outstanding dividends growth records on public markets, together with James Halstead, another business we invested in. It is very much these qualities we look for in businesses. Another favorite of mine personally is GB Group, a business we have been investing in first in our microcap fund, then in our VCTs, and seen how that business traded through cycles and then plugged it into our AIM Inheritance Tax product. It is a global leader in identity verification and proofing, and very much has a blue chip client base. Companies like Stripe, William Hill, Etsy, you name it, they will use them to verify the people they do business with. So they're very much helped by global macro trends like business moving online, increasing regulation around personal data, and so that's the kind of businesses we really like and like to invest in. Good management team, strong track record, and really a clear vision of creating value for shareholders.
Okay, and there is some sort of concern in some quarters that there's suddenly quite a lot of money going into AIM stocks due to their inheritance tax benefits. Is there a bubble?
We have been getting this question for about 2 years. It's true that some stocks have seen massive increases in valuation. Now, these are not necessarily IHT stocks. These are stocks where the market gets excited about the growth prospects and the valuation and the opportunity that those businesses have. Don't think that is an IHT thing. That is happening all over the world, and it's just the nature of having a very good story to tell as a business. If we did a very detailed analysis of our own portfolio to understand whether there is an IHT bubble, and if we look at these share registers that we are invested in, we find ourselves alongside big institutions which do not offer IHT mandates. So we don't believe that. So you don't find the same IHT bias on the notifiable interests of these stocks. We look at our buy list, so the stocks we buy for clients, and share prices have gone up, but the underlying earnings of those businesses have caught up as well. So there have been earnings upgrades to those businesses, hence justifying their rating. So there was just a modest inflation in those stocks. So no, I don't think so.
So I'm going to try and encourage my parents to do an AIM ISA this year. Why should they choose yours?
Yeah, it's very much, they have the benefit of investing with a team which has been doing it for a very long time. We've been doing it since 2005. We've been managing these portfolios through the financial crisis. We know how these businesses react. We have a very intimate knowledge of the entire breadth of the market and very good relationships across the board. So you get a experienced big team which has the capacity to research these stocks in detail, which takes a patient, disciplined, proven approach to finding companies and becoming co-owners in them for the long term. And I think that's what we offer.
Thank you very much. Dominic Weller of Octopus Investments.
Thank you very much.